Hello traders and welcome to another video review. Today is Monday the 9th of the August 2021. Let's take a look at the Forex calendar for the beginning of the week. So what do we have here? Not too much data, but very interesting data came from China. The CPI has beat the expectations of 0.8% with actual reading of 1%, which is almost the same as the previous reading of 1.1%. Producer price index beat the expectations as well, 9% versus 8.6%, and it's bigger than the last month number of 8.8%. During the London session, we don't have too much data to be released. Unemployment rate from Switzerland, trade balance from Germany, and sentings, investor confidence are not really that much important. They don't have too much impact on the market. And during the New York session, we have the FOMC member Raphael Bostic speech scheduled for release at 4 p.m. On Friday, last Friday, we got the NFP numbers, and the NFP numbers beat the expectations of the 870,000 with the number of over 900,000 jobs. If I recall correctly, it was 946,000 jobs. So pretty good data from the US economy, US job market as well, and we will take a look on the American dollar today to see what is going on there. But first, let's take a look at the euro dollar. Let's take a look at the majors first. Euro dollar is going lower. Why? Because traders are selling the euro and buying the dollar because of the main trigger is of course the better than expected data of the labor market in form of the NFP. So what do we have here? We have a test of the last low at 1.1755. We have breakout lower at 1.1743, which is around 10 pips lower than the lows of the July 2021. We already broke below it. So the first thing is now that whether this level will be violated further, I mean lower, or whether this level will hold. That's the first thing we need to keep an eye on. Most likely that we will see some kind of a bounce, but please notice the RSI. RSI is not in the oversold conditions yet. It's weak, it's negative, but it's not in oversold conditions yet. So we might dive a little bit lower towards 1.7 level, 1.1703 to be exact. And then, of course, that's the good technical support to expect some kind of a market reaction higher. Please notice how well worked this parallel channel lower line here. The euro didn't even retrace 38% of the last swing down. Of course, right now the new low is here, but this is a daily candle, so it's not closed. It's still in progress, so we have to wait for the candle to close in order to see what is going on. So 1.1703 is the next technical support, and the others are 1.1613 and 1.1604. Those are the next technical supports for the euro. Of course, we still have the technical resistance. The immediate one is at 1.1909, and the key one is 1.1952 on the euro dollar. So what is going on the gold market as well? Let's take a look. Well, we have a big sell-off. 50% of the Fibonacci retracement of this wave down were very good level to enter short positions, and as you can see, our scenario is working very well. A very big pin bar is being developed here. It looks like we have some sort of the positive divergence or bullish divergence between the price and the RSI. RSI is already in the extremely oversold market conditions, as you can see. So we might see some kind of a bounce, and part of this bounce is being produced right now. 50% is no longer required because now we have a different swing. But as far as I'm concerned, we have hit 61% of the whole move. As you can see, this whole move up, we finally hit it. For the third time we hit this 61%, which is why I didn't remove it from my chart. So this is the level, if you're wondering where this 61% came from, that's the level. We don't need this channel anymore. I will leave the blue trend line. We'll switch the colors from red back to the from green to red, because now all of these levels are, of course, the technical resistance levels. This one is not necessary anymore. So 1750, 1760 is the technical resistance. This is our Fibonacci retracement, and we have, of course, two more supports. So this one will now act as a support. So that's the green one, and that's, of course, the green one as well. We will make a copy because there is one more level here, which is the low of the end of the March 2021 at the level of apparently $1,677. So very interesting pin bar here if we end up our day like it is. One more thing I would like to do is the Fibonacci extension levels, because I think there will be some kind of a, there should be some kind of a there you are. Yep, 100% is almost there. 61 is of course violated, so it doesn't count, but 100 is here, and 1.27, which is typical for gold to do, is here. So we have the zone, kind of a zone here. Well, the 1.27 is way below the lows of the March, so we have to pay extra attention to this level, 1,623. 100 is 1,668, which is slightly below this lows, but it's still on the in the zone. Maybe I will just paint the zone with the rectangle. A rectangle should be, of course, because it's a demand zone, so we will make it green. So this is how it looks like. Very strong confluence of previous supports and the Fibonacci retracement levels and the Fibonacci expansion levels. So 1,668 might be very tough to break for the gold traders, and on the other hand 1,750 looks very solid as well. What is the US dollar doing then? US dollar is going up. As you can see, we have a breakout above 92.52, so this scenario is invalidated. Our key technical support has not been even touched, so that's very nice. And right now we are going higher. We are going higher towards the level of 93.16, and there is still a chance for this market to hit the highs of the last day of the March 2021, 93.42. So far so good on the US dollar as well. Our scenario is intact. We are going higher on the US dollar. So at the end of the day, what is Bitcoin doing? What's the cryptocurrency is doing? So our main scenario of wave A, B, and C is still correct, but please notice that this is the last time I can move my C wave higher, because there will be wave 1, 2, 3, 4, and that's the wave 5. And that's it. We cannot go even higher. If we break above this high from yesterday, which is 45,154, then this ABC correction scenario is invalidated. Of course, we have a bearish divergence between these two highs here and these two highs on the RSI indicator. So this is the confirmation that this might be the fifth wave, because it's very common for the fifth wave to do this kind of a divergence, which is why I don't abandon my scenario just yet. What worries me is that there is a breakout above this supply zone again. So 41,893, 43,212 is right now kind of a support, of course, and a kind of a supply zone. So if we break back below it, that might be very, very negative for bulls, and we can see a deeper move to the south then. So please keep an eye on this zone as well. The next target in case of the extension is $47,060, and we will stick with that until this market will develop any other movement. Please notice that this move to the upside, if this is wave C, the alternate Elliott wave scenario is that this is the potential wave 1, because wave C is the impulse and wave 1 is an impulse as well. So that might be the wave 1 and the beginning of the new trend to the upside. So please keep an eye on the Bitcoin behavior, because it looks like if we will not dive immediately back down here in impulsive manner, Bitcoin might be going higher very, very soon. So that's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys soon. Take care and bye bye.